News breaking literally just minutes ago. The world's largest money manager, BlackRock, out with its earnings this morning. We are joined now by Larry Fink, BlackRock chairman and CEO, in a Squawk Box exclusive interview. Good morning to you.
Good morning, everyone.
Lots to talk to you about. Company earnings per share of $7.52 that did come in above estimates. Total, by the way, and tell me if I'm wrong about this, in terms of the estimate, though, for assets under management falling slightly short of estimates. And so I think investors are going to be trying to grapple with both sides of this. How are you thinking about it?
Well, it was a tough quarter for the whole entire industry. The industry saw over $100 billion of outflows in equity mutual funds.
You had $24.8 billion in outflows?
We saw some real large de-risking in our index equity positions. We saw investors go from equities into low duration fixed income. We saw people run to cash. But overall, we had $34 billion of inflows in ETFs. We had positive mutual fund inflows at BlackRock, so it was more institutional. We saw huge movement from clients, right. A lot of churn, and it was just. I think the markets are showing that investors are confused, but overall, because of expense discipline, because of how we've navigated, our revenues were up 18% in our Aladdin business and our technology business. So overall, it was a good quarter, but I was disappointed in our net flows, but very explainable by some large de-risking.
But Larry, just to dig into that a little, I mean, you're talking about moves that happened before this most recent market chaos, because it was the end of the quarter.
No, but we saw huge outflows before the fall.
So people are much more nervous.
Oh, absolutely. I think people are there's a huge commentary that we're at peak earnings, that earnings can only get worse, which we could all debate that. You know, we believe we have a couple more good quarters in earnings, but there is that view. There's a view that I think we're hearing that in Europe more than the United States. Companies are having margin pressures because rising wages, which may be a good thing for the overall economy, but not as good for corporate profitability. And you're seeing modest inflation increases in certain finished goods, some of it in the United States because of our tariffs in terms of steel and things like that. And so overall, you're seeing more consternation, more fear.
That consternation, is that being felt? Do you look at the institutional side? You were talking about the institutions before, or is that a retail issue?
It's both. We did not see it in retail. We had net inflows, but the industries had outflows. Institutionally, there were just two or three large.
But when you look out at this quarter, from what you can already see,
we're not seeing much change in attitude. We didn't see any wholesale changes. I think this is more. I actually believe the last 2 weeks was more of a hedge fund phenomenon. We had a couple big announcements of hedge funds closing down. I think there was a lot of de-risking going on from the hedge fund community. In the last 2 weeks, we did not see big outflows from any of our large.
When you look at what's happened, this roller coaster ride of the last week or so, or 2 weeks now, what is that? And do you expect? I mean, we saw a note from Morgan Stanley just last night. They think we're moving into bear territory here.
Well, almost 80% of the stocks are in correction phase today. So I don't think that's something unique. You could just look at most of the stocks that they're in correction phase right now. So I don't think that's something new.
Correction's not bad.
Pardon me?
Correction's not a bad phase to be in, because they can go back up.
We've had a marvelous 10 years.
Right. No, but you sound like you're talking about maybe a bear phase or a secular bear phase.
No, I actually believe the economy is going to remain strong.
Just inflation doves say that we're not seeing the wage inflation where it's risen to a level of to start worrying about at this point. You just said margins are being affected. Are we seeing margins negatively affected by wage pressures in corporate America at this point?
Well, no, I said more European companies.
Oh, European companies. So there's wage increases. We don't care if they. We don't care what happens over there.
You're seeing margin pressures. It could be wages. I have not dissected.
Are there margin pressures domestically?
There is worry. I didn't say the market is correct. There are worries that we are at peak earnings, that we're going to see more margin pressure, that we are going to see some wage increases. Now, let's be clear. The index that we see related to wages is very skewed by when elderly workers who are the highest paying people retire, they're replacing them with younger workers who are getting less wages. And so much of that is masking the big wage increases in technology and other areas. So we're not...
Automation, too. I mean,
so there are big wage pressures in, I would say, some of the big professional areas that a lot of firms have to hire. So if you're in a technology firm, you have wage increases going on there. But it is being masked by this mixture of retirees.
Or do you get the feeling we're underestimating the inflationary?
No, not really. I'm not that worried about inflation at the moment.
That's the only thing that really gets out of hand, which causes the Fed to go higher than it thought it would have to go, which sort of chokes. I mean, as we've said a million times, you don't die of old age. Economic cycles.
We are seeing an economy that's growing at 3+%. We're seeing areas of where there's difficulties of hiring people. So I see what the Fed's seeing, and I understand what the Fed's doing.
But is it possible that all those things are actually, just take them at face value as positive? Because if they don't cause inflation, then they don't turn into that cycle where we have to cool things off.
Sure, but the biggest risk that no one wants to talk about is how the tax law has changed housing affordability for so many.
You mean in the Northeast and the blue states?
No. Even places that have beyond high income tax states.
Because
we have a $10,000 cap on deductibility. So obviously, most people in the blue states are already impacted by that already. But it's now the state in other states when you have. If you live in a city like a Miami or a Dallas, probably the average house there is $600,000-$700,000. I don't know what to the degree. And most Americans still have floating rate mortgages, 50-odd%. Right. So now we've witnessed about 100 basis point increase in interest rates. So, that's going to add $1,000 of interest costs. More people are going to be hitting this cap. Right. And that's going to impact the desirability of housing. So I think we have actually a little more bigger issues to focus on related to how the economy can perform in a rising rate
environment. That might explain the
right.
weakness in housing is not just supply. Maybe it's what you're talking about.
I think it is now housing affordability or the lack of affordability is kicked in faster than any other time because of this new phenomenon.
And you think therefore it's going to affect the market?
I mean, there are places where you're not allowed to deduct.
No, but we're not. It will take time to adjust to that.
Right.
But let me just get back to my earning for one thing. The one thing that we haven't focused on is we raised another. We're going at a record rate of raising assets in alternatives. We've raised now $16 billion over the last 12 months in illiquids. So we're raising record amounts for us, money in alternatives. We still see very large interest from our clients. We're in the midst of some big asset raises going on in the fourth quarter and the first quarter of next year. So,
what are alternatives? Describe that.
Could be from real estate to infrastructure, where we're seeing very large demand, especially in renewables and ESG-related infrastructure investments. And so, and it's obviously hedge funds, it's fund of funds, it's private equities.
Let me ask you, on the alternatives subject, you folks started investing in a number of private startups, sort of the technology startups. I'm thinking of the Ubers of the world and others. Has that, you think, ultimately been a successful
Overall, it has been, but it's not a major effort for us. We have a couple big funds that have the ability to have a small portion of their funds in illiquid privates, and so that's where we're investing. It's not a large component of what we do, but we have done, let's say, 5 to 10 different very public ones.
Since you spend your time on an airplane, we have a handful of geopolitical questions, all of which, by the way, are going to affect the market, including oil and China. But we do, given the headlines, and we've been talking about this morning, on Saudi Arabia, you were one of the executives yesterday with Jamie Dimon and Larry Fink. You are Larry Fink. With Stephen Schwartzman, who decided to pull out of this conference. Can you tell us about that decision? Because you've had business with Saudi for a very long time.
Well, I have been going to Saudi for years and years and years, as much as 3 to 4 times a year. But, we have an incident right now that we have to be mindful of. There's an unexplainable death or murder. It could impact relationships worldwide. We have to be sympathetic to this. This was a big issue with BlackRock's employees. This was a big issue with many of our clients who reached out and called. So we received a lot of incoming about participation. And these are the issues around being a big public company, that you have so many constituents. I write about this in my corporate letter. We needed to be thoughtful and mindful of how to navigate this. And so as a friend of the country's, I wanted to do this in a way that I was trying to preserve the relationship with that we have, that we've worked so long for, and yet we needed to be mindful of this investigation. What I wanted to do was to find a way that we could possibly have this conference delayed until the investigation is completed. We have better information, and we could do this in a non-emotional way. I did not achieve that objective, and so I had to make a decision related to, okay, my relationship with the kingdom and my relationship with all my constituents. And it was very clear I had only one choice, and that was to withdraw from the conference. It does not mean we are going to run away from the kingdom. We do business in 80 different countries. There are many countries where we may disagree with policies, but this one event became such a lightning rod because it's so public in nature. There are many things that you can do and try to build a commonality, build a bridge in which you can try to build. And, you know, I have been a lifelong globalist. I'm still proud of being a globalist in this day and age, and we're going to continue to do business.
If it becomes clear, without a scintilla of doubt, that either King Salman or MBS ordered this, you going to cut off all business ties with Saudi Arabia?
No.
And the United States is in a similar position, $200 billion in arms sales, and a, you know, to thwart Iran hegemony in the Middle East.
There are many businesses that do business worldwide, American, non-American. Look, our job is to build bridges. Our job is to try to find commonality. There are many things I disagree in my own country, and there are many things I disagree in every other country.
It's going to be a tough, you know, if the people that see things in black and white, Marco Rubio, whomever, that look at something like this should be disqualifying for any relationship whatsoever. And that's just not the real world, I don't think.
It is, you know, no one likes to make black or white decisions. Sometimes you need to. I don't know if at this time I need to make a black or white.
So what was the Saudi reaction to just you pulling out of the conference?
I mean, look, keep in mind, Saudi has some very, you know, the oil minister is very commercially minded. He ran, you know, the oil minister ran Saudi Aramco. We're talking about, you know, the economy minister was chairman of one of the big banks in Saudi Arabia. We're talking very commercially minded leaders, and I had conversations with many of the different leaders, and they understood. They understood that they preferred we were not withdrawing. They would have preferred we stayed, which I understand, but they understand that we have many different constituents that we have to balance out at this time. It does not mean we are withdrawing from the kingdom.
We've talked about what this could do to the price of oil, not necessarily your decision, but the relationship between the U.S. and Saudi, and frankly, Pompeo is over there. Secretary of State Pompeo is over there right now. What do you think the right role of government is? Because I do know also in the conversations you and Steve Schwartzman and Jamie were having was really the hope that Washington could take the lead on this in a way so that you wouldn't have to. And the question though is, what if they are to take the lead? What does that lead look like?
It's always convenient to have a government to stand up first. You know, I don't know the relationships that the governments are having with Saudi. I assume they're very strong and consistent. So,
but I don't think you would want that for the U.S. to take it. I mean, do we think that Putin has never pushed a button on someone? Is that possible?
I'm not going to talk about.
I know. Okay. How about in China? How about we know Kim Jong-un has pushed button, and these things, in
these
the real
are very
world,
delicate issues. That's
right? But you have to deal with what you're the hand that you're given. You can't change. So I don't think you'd want the United States government just to.
I don't want a black and white decision. Right. You're right. Because we have been really strong allies, the United States and Saudi. Let's be clear. To execute the sanctions against Iran, we need Saudi to ramp up oil production. They have done that. Right. They're almost at peak capacity right now, and they're trying to, I don't know that to the ultimate degree can they ramp it up more. But, we are now witnessing worldwide at a time where the American dollar is very strong, and we're witnessing very strong energy prices. This is one of the reasons why we're having market volatility, why the emerging market's doing really poorly. This is one of the reasons why, getting back to BlackRock's earnings, we had such large divergent beta, outflows in emerging markets, downdraft in emerging markets. I mean, one of the great statistics that stunned me, and we haven't talked about it enough, since the beginning of the second quarter, emerging market equities are down 10%, and yet the S&P is up 10, a 20% divergence.
Yeah.
And so having a strong dollar in front of having rising energy prices is really destabilizing for the world. And so we need to have proper diplomacy with Saudi. Our hope is that energy prices drift back lower, especially if the dollar continues to be a strong currency.
In the other category of diplomacy, the other country we haven't talked about, you spent a lot of time going there as well as China.
Yes, I was there.
And where this trade war and tariff war starts and where you think it ends and who has the upper hand at this point?
I think both countries can place a lot of damage on each other. Hopefully it doesn't go there. Hopefully this is just contained to a trade negotiation. The last thing anybody wants is a financial war. We will both be harmed by a financial war, and a financial war meaning they selling their treasuries.
Do you think that's a possibility?
Sure. If their economy comes unglued, and I'm not saying it will, if, there's always rumors about $7 trillion of debt that could explode. If they have to do a massive fiscal stimulus, they have no choice but to bring down their reserves. That's what countries do. Would they sell U.S. assets as a defensive action against us? I would think that's going to be their last resort. I think China's just as dependent on Southeast Asia. They're just as dependent on global trade away from the United States. Think about the actions of selling U.S. treasuries. It means their currency rises quite a bit. That would hurt them.
You remember that expression, if you owe the bank $100,000, if you owe the bank $1 million, you own the bank. It's just almost kind of the same thing with China. Right.
But look, I think they are trying to act reasonably. I was there last week. I think they're trying to find a way to resolve this.
In the last 5 years, Larry, have you seen, we talked about this week too, have you seen China sort of take a tougher statist communist role? That's what the Journal in a piece was saying, that she has definitely backtracked on some of the reforms that maybe were made in
or some of the claims that reforms are going to be made. There has been a slowdown to some of the reforms. I believe they still will continue to do the reforms in financial services.
But are we justified in taking a harder line?
Well, we don't.
You got a lot of. He's all over. You got to walk so tenderly on all these things.
I do. But we all do. I'm not.
Right. But business interests are.
But this is getting back to my corporate letter. Why corporations need to talk about their purpose and what the values they stand for. I believe in this really incredibly transparent world that we're witnessing, in a world that is so connected because of social media. It is more incumbent on corporations to really talk about who they are and what they stand for.
Can I ask a separate question just about the investing world? What do you make of just the rise in robo advisors and what that's going to ultimately do to your business, one way or the other?
Oh, you know, we have one of the leading robo advices in Europe, and we have one of the leading ones here in the United States.
But is that going to change the way? I mean, this idea that people are going to be buying iShares and are going to be actually playing the markets. Do you think that's going to go away?
Playing the markets is not going to. They're not going to be using BlackRock. They're going to go to the trading platforms. Look, I believe the biggest problem we have in the world, I've talked about this for years, is financial literacy. And I do believe one of the great worries why we have rising populism worldwide is people are frightened of their future, they're frightened of their retirement. We need to use technology to embrace financial literacy. We need to create technology for financial services. We need to maybe we have to gamify investing, you know, using mobility, and we need to get the next generation really up to speed in terms of what it means to invest for their future.
You still think they're not participating in what has been this past decade-long run?
Very little. And I think this is one of the fundamental problems. The central bank's response to the financial crisis, they only have limited tools, and those tools are generally tools that will strengthen financial markets, and that's what they did. If you look at where housing is and where housing, you know, housing's up, but not nearly as much. And this is why you're seeing those who had equities and financial assets did much better than those who were just having their equity in their home.
Larry, just to recap your thoughts about the market, because we have a lot of people who are sitting at home. They want to hear what you're thinking about what's just happened. You said the most recent couple of weeks was really hedge funds de-risking and deleveraging.
And some hedge funds announced they're closing.
And so big concerns that went on with that. But when you talk about peak earnings, that theory that's out there, you don't think we've hit it yet. You think there could be several quarters.
We believe there's a few more quarters. The U.S. economy is still strong. Can it weaken going into the fourth or first quarter if interest rates continue to rise? Sure.
A few more quarters sounds very dire.
No, I mean,
but for now, a few more. Then we'll reevaluate.
But I'm not suggesting we're going to fall off a cliff.
Right.
I mean, as Joe said, there's nothing wrong with a correction. I mean, I know we're all frightened of a 10% correction, and we've seen in 80% of the stocks more than 10% correction. We've seen closer to 15, 18% correction with most stocks today. PEs are lower today by 3 multiple points than there were in January. So if you liked equities when everything felt great, you have to like them more today. The market is actually adjusting to this fear. The market is actually adjusting to the uncertainties. Maybe we are in peak earnings, maybe we're not. But the equity market overall is cheaper today than it was in January.
Larry, is there anything to the notion that, you know, Murphy's Law, or is it ironic that you decided to take the lead on corporate, you know, accountability and being good actors, and then a couple months later, 2 of your biggest areas of the world where you need to operate does these things, putting you in a position where you have to actually live by your words, and it's like, why did I say that? Now I got to do the right thing in China, I got to do the right thing in Saudi Arabia. It's like, why did I open my, maybe I should have waited until next year to do the big corporate.
It's like life at home or life anywhere
It
else.
is ironic, though. I'm kind of laughing because you're going to be so morally, well, then you should cut off all business with Saudi Arabia immediately.
I said I'm not.
I know you're not, which makes it hard for you because you just, to walk the walk for what you said corporations should do, you should be doing that.
I think we are doing that. I think we're trying to walk the walk every
tough.
day.
It's a difficult walk.
I didn't say it was not difficult.
It's like on a balance beam.
If you don't talk about your purpose, I actually believe you wobble, you go back and forth. I do believe more than ever you need to do this so you can withstand stuff like what you're talking about. I'm like, these are difficult decisions. Right. And I am not going to have everyone agreeing with my actions.
It just got a lot tougher in the last 6 months to do.
I think it's getting tougher and tougher, and I think this is one of the reasons why governments are too focused on short-termism. We're all struggling with this
but you know what?
Social media.
Black and white decisions are very rare.
But I think they've always been rare.
And it's a great, so many things
are a great
gray area. And nuanced.
Larry Fink, thank you for coming in.
Yeah, thanks for all your time.
And spending time with us on so many different issues.
You're very honest.
On your earnings
Thank you.
I try to be
very honest, and I like that.
Thank you.
Great.
Thanks, guys.